FY25, and the annual rate at 33.7% is the highest since FY13. Do you think the concerns
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trade setup and the market strategies that you need to focus on right now. Let's quickly start with a recap. Yesterday, we did see the equity indices end higher after ending a 3 days of a losing streak. This was largely supported by the positive global cues as well as the buying across the sectors, barring just the real estate sector that fell flat to a negative bias in trade yesterday. But several smaller pockets like defense, railways, fertilizers, they have kept the momentum going for the markets. Now, as we enter into the weekly expiry session today, again, we are actually hovering around the mixed global cues, and we will see how the markets will navigate that. Remember, we have US President Donald Trump announcing on Truth Social that Russia will respond to Ukraine's recent attacks. So the geopolitical tensions continue. US macro data reported yesterday was also tad bit weak, reinforcing the case for a Fed rate cut. But that weighed on the sentiments on the Wall Street as well. So the US stocks ended mixed on Wednesday. S&P 500 flat, Nasdaq slightly up, Dow Jones, however, slightly down in trade as the weak data revealed that the economic toll has been taken by President Donald Trump's trade policies already. Now, when we look at how the Asian markets are trading this morning, cautiously after the weak US economic data, reinforcing expectations of that Fed rate cut. The gift Nifty trends are also indicating to muted start at this point in time, following what's happening in Asia. So look at Hang Seng, that's up in trade, but China index is down. Nikkei is slightly down in trade. Kospi, although, is hovering higher, but muted trend as far as the gift Nifty is concerned. Now, what are the foreign flows telling you a picture of? FPI has turned net buyers after 3 sessions, buying stocks worth about 1,076 odd crore rupees. Now, domestic institutional investors stayed net buyers for the 12th straight session. We have seen them purchasing 2,566 odd crore rupees worth of stocks in the Indian equity markets. Of course, we will be looking at a whole host of stocks that will be definitely important to watch. But let's welcome our guest on board. We have with us Mr. Devin Choksi joining in, the MD of DR Choksi Pizza Private Limited. Warm welcome to you, Devin sir, and thank you so much for taking the time out. So much is happening both on the global as well as on the local front. Let's start off with understanding as well as how US is going to be important to really track in terms of how retail investors should be watching out for. One, the Trump trade policies, they continue to be in an uncertain zone. Recently, we've seen how the order was signed on metal, steel, aluminium as well. There is again fear that EU or China may actually come up with a retaliatory measure. The geopolitical tensions continue. US macro data is again indicating to some support that Fed rate hike, rate cut must be providing it now going forward. And domestically, of course, we are seeing some sectors come back into flavor, but will we be having the inherent strength to continue to climb all the walls of worry that are existing on the global front, sir?
Good morning, Sakshi. Well, I believe that I think if the dark clouds are existing outside the country, there is definitely clearly a good sunshine out here inside the country. What we are observing that while all the negatives which you probably mentioned, I think are staying outside the country, in the country itself, we are seeing significantly large amount of progress happening. We saw the last quarter's GDP number. We have been seeing that imported inflation is coming down. We are seeing that the RBI is bringing down the rate of interest. Government is spending more money and now having more ability to spend more money because of the higher tax collections. In PLI schemes, the implementations are actually happening. The new generations or the new industries are coming up, be it cloud computing, be it semiconductors, renewables, among others. So in my viewpoint, I think we are pretty busy domestically with the kind of progress that we are doing currently in every area of activity. And if I think one silver lining, which is definitely being seen currently, is the chances of metal commodity prices going up because of the global uncertainties, global destructions, global wars. I think there are good amount of possibility that in next 3-6 months time, the reconstruction activity would start in those disrupted areas, and probably you are going to see the larger amount of consumption of metals coming up. So next 6-12 months time, I think we are going to see a good amount of possibility for metals. Currently, we are experiencing good amount of possibilities for rate cut, and I think that is where some of the metal and NBFC companies I think should be looking up. Similarly, I think some of the manufacturing companies which are catering to defense, catering to railways, capital goods segment, engineering R&D segment in IT, I think some of these companies are certainly looking up from the business perspective. So we remain cautiously optimistic. We remain careful about the valuations that these stocks are available. And wherever the market gives opportunity at corrected valuations, we believe that I think it's an opportunity from the investment point of view. So I'm summarizing whatever the negatives outside versus whatever the positives inside the country and where the opportunity lies.
Absolutely. Devin sir, tomorrow is when we will see the RBI policy. Are you penciling in another rate cut this time around for the third consecutive time? 25 basis points is what the consensus estimate is from most of the economists at this point. Will that be enough to provide a further trigger to the market's recovery that we have been seeing now?
So the RBI has done, I think, 2 rate cuts already. And generally, when the rate cut cycle starts, I think it lasts for about 8 quarters. In my viewpoint, I think the 6-quarter cycle, I think rate cut cycle is definitely being seen currently, out of which 2 we have seen. We will be seeing, I think, one more tomorrow, I believe. And one reason for that would be that they are giving banks a chance to adjust their balance sheet by reducing the rate by quarter percentage in every quarter. As a result of which, I think the banks do get chance to asset liability of their books. I think they do get a chance to, I think, make these particular provisions in well in advance. At the same time, I think they do get an opportunity to, I think, pass on this cost to the advantage of the borrowers. So, in my viewpoint, I think this is going to be continuing for a few more quarters. One. Second, gradual reduction is what I am expecting, because I think banks can then pass it on to. Third, I think it inspires the confidence in the corporate sector to put in capex program, because when they see the RBI is bringing on the rate of interest. So we remain, I think, watchful, but at the same time very positive about the possibilities going forward.
Okay. Let me also talk about a few sectors then. So we'll start off by talking about the sectors that are in focus, the erstwhile favorites, defense, railways, they are coming back in flavor. I mean, defense has already had a 3 to 4 weeks of a run up. Many of these stocks are climbing to fresh record highs. There are intraday moves of 8, 10, 15 odd percent on many of them as well. I also want you to draw the parallels between the kind of move that we are seeing in defense stocks right now vis-a-vis the previous rally, and then followed, and how should then therefore the approach should be for investors. And now railways have also started to support the sentiment. So how would you look at these two erstwhile favorites right now?
Undoubtedly, the growth is going to be higher in defense as well as railways, undoubtedly. And given the current situation in which the government is trying to build the defense as much as possible on Make in India basis, I think the allocation of money also from the government side will be increasing, duly supported by the tax collection that they have. So in my viewpoint, I think the companies will not be complaining hereafter about the orders that they will be receiving from the government. In my viewpoint, I think they will be having the serious challenge in form of execution of these orders. Because most of these companies, those who receive these orders, I think they have the ability to grow their base by not more than 15% at this point of time in the current infrastructure, current management of manufacturing operations are. Should they be in a position to exceed this rate of 15% rate of growth, then possibility of, I think, you seeing I think higher amount of appreciation in the stock price can't be ruled out. But currently, as I see it, I think the amount of growth versus the valuation that these companies are commanding, in my viewpoint, I think despite of all the positives on one side, I think everything is being fully priced into the stocks, most of the stocks. And maybe I think you can put across a slide on your screen wherein I think you show at what valuation these companies are putting versus the growth that they have produced in the last quarter of the financial results. So I think it is a time to remain a little bit watchful about it, not to get overboarded about the situation, because I think if you start discounting the valuations 3 years in advance, quite possible that you are not giving any margin of error in this particular situation, and that can possibly affect your portfolio build-up in the course of time.
Absolutely. Devin sir, another key aspect that I wanted to ask you on is that, we have been seeing so many block deals take place in May. I think to the tune of 60,000 odd crore rupees have already taken place. This is the second largest kind of monthly block deals that we have seen after August of 2024, when there was already 74,000 odd crore rupees of block deals, bulk deals taking place. For an average retail investor, what signs should one really pick up? Because there is a large sell-off from promoters. There are many where PE investors, early investors are actually exiting completely. So cleanup trade also taking place. Does that mean anything for all those investors who have position in such stocks?
Two ways to look at this entire subject. The first side of the positive side is that the existing investors stroke promoters are parting their stake to other investors, which means that not only they are booking profits, but at the same time, I think they are allowing other investors to enter into the businesses, which up till now, because of the large stake held by them, I think was probably not happening as much as it should have happened. Case of ITC, case of Tata Technologies, I think there are relevant cases wherein I think these companies have actually, I think, ended up giving the shares in the hands of the financial investors, and which is fundamentally very, very strong, very, very important aspect to me. As far as retail investors' outlook is concerned, if those companies are fundamentally not doing well, then they must worry about it. But if the companies are doing well fundamentally, then I think they should see this as a prospect for them for investment. Because when this kind of bulk trade takes place, for a shorter period of time, the price to come down. And I think during that particular fall, if you have ended up buying some of the good quality stocks in your portfolio, probably I think that gives you the cushion, that gives you the margin of safety when the downside takes place in the normal course. So we remain distinctly positive about the prospects. I think very qualitatively some of these companies are parting their stake. I think they are not parting their stake in distress, which is very, very important to understand here.
Now, Devendra, help us understand. We have just concluded the Q4 earnings. After the earnings, what has stood out for you? And after the earnings, have you added a few stocks to your clients' portfolios? Are there any key sectors that you have probably turned incrementally more bullish on? What has been the key takeaway for you from Q4 earnings?
Well, I think the most important part that the Q4 has not only stabilized but also indicated the larger growth for the next 12 months or 4 quarters. So this is fundamentally important. If you go across the sectors, each and every sector, the leaders, I'm not talking about all companies, but at least the leaders have talked about growth in the following 12 months. And they have shown growth in the fourth quarter, which is important. So if first and second quarter of the 25 financial year were down, third quarter showed some kind of stability. And in the fourth quarter, actually, I think from the springboard, this particular jump is taking place, wherein they are seeing the growth. Now, in my viewpoint, I think that springboard jump is now going to last even for this next 12 months also. And that's where probably you are likely to see at least 15% kind of an average earning growth in Nifty 50 stocks. Given that kind of a situation that we are seeing, I believe that I think the market will be full of opportunities in the current financial year. Maybe some amount of rotations, some amount of profit booking, some amount of sectoral preference will keep on emerging from time to time. But the important part here would be that opportunities are coming up big time, and this time around in large cap stocks. So I think the rally could possibly continue with the large cap stocks buying taking place in the market.
Okay. Within large caps, sir, are you going to be really looking at the banks and the IT names yet again? Are there more that you're adding onto list? What about FMCG at all? Where does that play when it comes to the large caps, sir?
So our preference has been on the consumption side. I think discretionary consumptions, wherein auto ancillary and real estate is something which we continue to bet on. And within real estate, we also include the housing finance companies because we believe that I think they are the ones who provide the shock absorber in this kind of a marketplace. They actually move with a steady pace of growth and at the same time generate steady set of return also for the investors in a compounded manner. So we do like, I think, this consumption spend. We also like the industrials consumption, wherein auto and auto ancillary and above, I think, would be the defense and manufacturing of railways and the ancillary companies which are getting to railways. So we believe that this capital goods segment also in manufacturing could be the good choice to buy. Fortunately, some of the companies have corrected on the price and they are yet to, I think, achieve their previous highs. So we believe that I think these companies could possibly show the upside in the coming year. We also like metal commodity, which I alluded earlier in the discussion. I feel that I think the metal commodity is a dark horse, is something which is likely to show relatively better performance in the current financial year. And last but not the least in the area of preference is about banking and non-banking financial companies, wherein some of the larger units are likely to show better performance in the current period.
Okay. Since you're talking about the NBFCs, HDB Financial is what I wanted to discuss with you. So the first subsidiary of HDFC Bank, which is now going to be going public. So far, it has been HDFC Limited, HDFC Insurance that had gone public, AMC went public. Those were a part of HDFC Limited. But now, for the first time, we are seeing HDFC Bank subsidiary come in. What opportunities does it offer for retail investors who may be looking at this?
The promoter is definitely, I think, excellent promoter. There's no doubt about it. HDFC Bank, I think, is the promoter, and I think the business model is also carved out well, wherein you are catering to the individuals for a variety of personal loans, unsecured loans, etc. At the same time, some of the SME, MSME segment to whom you are catering to in this particular company. So very clearly the path has been drawn between HDFC Bank and the HDB Financial. So we like this retail focus of HDB Financials. Fortunately, I think it's already about a 1 lakh crore plus kind of an AUM book size. And we expect that the company could list between 85,000 to 1 lakh crore kind of a market cap. And should 10,000 crore of market cap be offered for sale, then in that case, I think HDFC Bank is also getting prime benefit because of, I think their book will expand for further lending. And at the same time, HDB will be in a position to tap the public sources for additional capital infusion and could show higher growth into the NBFC segment of business. So it's a win-win for both with this kind of a listing taking place, and we remain distinctly positive. Maybe it's not a game which you are going to play for 1 year, 2 year. Like Bajaj Finance have shown the path over last 10, 20 years, that if you compound the business at the rate of 25-30%, then possibility of, I think, you getting higher valuation at the same time, your stock price could possibly perform well. So today, HDB is 1/4 of Bajaj Finance, and I believe that I think that's where probably you're likely to see the opportunity in the upside for the HDB financials.
Okay. We also had a spate of new IPOs and new listings this entire last 1 week, 10 days. Has anything caught your attention at all, sir?
Not immediately sure which name I will select at this point of time, but Valorous, I guess, I think this is an auto ancillary company which came up and they raised money from investors. I like that model. I find that I think that business model is good, and the promoter probably is in the game for last many years. So the customer segment also to whom they are catering to in two-wheelers, I believe, in four-wheelers, it is definitely I think a promising company as it appears to be. Honestly, not putting any kind of a value or the recommendation at this point of time. But I think that I think it's a story that one can possibly follow hereafter.
Okay. Another space that I wanted your attention, sir, is on the renewable energy space, the power space, and of course the solar space as well. Some of these stocks are again coming back into momentum. It's the World Environment Day as well. Many, corporates, India Inc. is also focusing on decarbonization efforts at this point in time. Vedanta, we've come to know how they're expanding on their renewable energy footprint there. So, looking at this theme, how are you approaching at this point in time? Do you think the existing basket of stocks have enough opportunities for retail investors to look at, and maybe who have a long-term horizon? This is the right time to probably select some of the key stocks for our portfolios?
Again, I think what you end up selecting is more important. Whether you want to go for the equipment manufacturers or you want to go for ancillary guys like Valley and Premier kind of companies. I believe that I think valuations are far stretched, and I don't think that immediately these valuations are giving me any appealing kind of entry into these companies. Fundamentals remain strong, I agreed, but I think that 2 years, 3 years of forward earnings are already discounting the price today. So from that point of view, I think one is not very comfortable buying into. I would probably, I think, concentrate in an area where I think the infrastructure-led boom is also supporting, and that is the distribution of power. I think the transmission and distribution of power, and that's where the companies like Adani Energy or Power Grid kind of companies can make relatively more sense, because I think not only they are growing at the speed of growth that they are demonstrating, but they are also generating significantly large amount of cash because of, I think, the core infrastructure based activity that they are carrying out. So we remain relatively more comfortable in cash generating companies who are deploying this cash back into the business and growing the business eventually. So, but vis-a-vis, I think the ancillary companies, though they may remain good, but I think we are not too sure immediately whether we'll latch onto it because of valuation.
Okay. Lastly, Devin before we let you go, any space where you are absolutely staying away from right now, where you feel that this is not the right time to look at it, maybe either because of valuations or too much run-up has already taken place?
It's not the question of staying away from any particular sector or a company, but it's more of a priority in a given situation. And I think that is where I explain the priority that I think we have kept. We do not know, I think, which other companies I think we should be buying, but generally we are a little bit more skeptical about the valuations. We don't want to buy into a company where valuations are stretched and the growth is not catching up.
Fair point. Thank you so much, Devin sir. Always a pleasure to have you with us on Business Today. Let's look at the markets now. 24,652. We are looking at the opening slightly on the higher side, something that the Gift Nifty was already indicating to you. So it's a 40 point of an uptick, a very mild uptick, 1/10% higher as far as the Nifty is concerned. Let's also pull in the Nifty Bank to see how the support is coming in from the heavyweight spaces. Nifty Bank also 2/10% higher. That's almost 100 points up in trade at this point in time. Let's pull up the broader markets, mid caps and the small caps, to see whether the momentum that caught on yesterday carries on. Remember, the broader markets, both mid and small caps, outperformed the benchmark indices in yesterday's trade. 0.4% of an uptick for the mid cap index right now, 58,153. Let's also look at small caps that are now about 0.5% higher. So yes, a tad bit higher than the benchmark indices. Let's look at the top gainers on the Nifty at this point in time. Let's pull up. Of course, the IT stocks are also hovering higher. Remember, this was also a space that performed well. At this point in time, you have Dr. Reddy's, Zomato, that's now nearing 250 odd levels, 1.2% higher. Cipla, that's also inching up. But these are the top three winners as far as the Nifty is concerned. You also have Power Grid, Shriram Finance, Trent also moving up in trade right now. Let's look at the losers as well. Meanwhile, I'll tell you there are 112.70 advances to about 370 declines at this point in time. So the market breadth is favoring the advances. Tata Consumer Products, Axis Bank, HUL. So I think it's the FMCG stocks consumption basket that's taking a back seat. You can also look at Titan from the consumption space, that's also opening about 0.5% lower in trade right now. Bajaj Finance, Eicher Motors, Infosys are the other top laggards at this point in time. Infosys down despite the IT index holding about 0.2% higher in trade. Let's also look at some of the stocks that are hovering higher from the news flows list. Let's look at a BEL, for instance. Remember, this Navratna Defense public sector unit secured additional orders worth 537 odd crore rupees since the last set of orders that were announced on May 16. It's opening slightly soft, but let's pull up the shipbuilders. Those were the ones that were skyrocketing in trade yesterday. GRSE, it shot up 10% higher intraday. Cochin Shipyard, Mazagon Dock, there was flying away moves coming in, and now there is some sense of softness returning, which is absolutely okay. Mazagon continues on the higher side, 0.7% higher, 34.37. Let's also pull up railways. Remember, yesterday it was RVNL, it was IRFC, Railtel, Titagarh, JWL, all of these stocks that were, moving up sharply in trade. Let's pull up the one-day chart first, not the weekly chart. Let's pull up the one-day chart for all of them. RVNL slightly softer now on the back foot, 0.17% lower in trade. IRFC about 0.8% higher. Let's pull up Railtel, Titagarh Wagons, JWL. Those are the stocks to watch out for, in trade as well. Nifty Bank is absolutely flattening out. The currency is at 85.7 at this point in time. We'll keep an eye on that too. At this point, when we look at the rupee dollar equation, 85.9 now. So slight weakness that can be seen on the rupee front as well against the dollar. Now, when we look at the sectoral action, you have the PSU banks that are higher, you have defense stocks that are up, you have auto stocks that are higher, you have metals that are up, financials that are up, pharma also, real estate, oil and gas, and capital goods. What's down? You have Nifty Bank, now financials are also down, FMCG and IT. These are the ones that are starting on the back foot as far as the sectoral action is concerned. Let's now welcome our guest on board. We have with us Mr. Mitesh Panchal joining in, who's going to be tracking the technicals for us. Warm welcome. Good to have you with us, Mitesh, on the program. First up, it's a weekly expiry. How do you see the opening taking place? I think, could you unmute yourself? I couldn't hear you, Mitesh. Did you say something? Okay, we'll try and come back to Mitesh. In the meanwhile, we'll try to fix that line for us so that we can clearly hear Mitesh on that front. I'll quickly read out for you some of more names that you should be tracking on the news flows list. Vedanta is something that you're looking at today. The Indian mining and metals firm has said that it's increasing its renewable energy power capacity to over 1.03 gigawatts now. The company has also said it is on track to achieve its goal of 2.5 gigawatts of clean energy by 2030. Let's also look at the kind of moves that we are looking at. Vodafone Idea, that's the stock that we can look at because the telecom operator has called an EGM on 27th of June to seek shareholder approval for a 20,000 crore rupee capital raise and amendments to its articles of association aimed at retaining the promoter control. So let's see how that one also plays up today, soft with a positive bias. REC we are looking at again. Let's see. The company has proposed to raise up to 1.55 lakh crore rupees through NCDs on a private placement basis. Force Motors, again, the sales have climbed to 24.5% year on year to 3,002 units. We'll keep an eye out on that. And TPC Green has actually won about 1,000 megawatt of solar bits. We'll keep an eye out on that as well. This is in Uttar Pradesh that the company has got. Let's also look at Newgen Software. The firm has secured a $2.5 million of an order from international clients to supply its products and implement for them a digital transformation across multiple business systems. Positive news coming in from Newgen Software. You can actually see an 8% uptake on the stock after this news flow, 1327 right now. I think Mitesh is back with us. Mitesh, if you can hear us, could you tell us what's your first take on the markets after opening today on weekly expiry session, and how do you expect the session to pan out?
Yeah, so good morning. Sorry, there are certain audio issues at my end. So far so good. I think 24,644 where the Nifty is trading at. And as far as the Bank Nifty is trading, I think it is a bit softer with a loss of 89 points. But I am of the view that Sakshi going forward, any weakness should be bought into. So in the opening remarks, as you have rightly mentioned about the railway stocks, which was buzzing yesterday, and all the Musgao Dock and Garden Shipyard kind of stocks buzzing. So I think basically the momentum is with these stocks only. Four stocks we are just pointing out from a retail perspective, where we see
Okay.
a significant upside going forward. First is IFCI. If you look at the chart pattern of IFCI, it is looking pretty promising from the lows of around 45.50. The stock has picked up the space and now trading at around 67. One should get into the stock at the current level. Second is Infibeam Avenue. I think Infibeam Avenue from the lows of 1819, 1819, 1819 rupees has picked up the space and now I think trading comfortably above its immediate resistance level of 21. So that is picking up the space. Second is MMTC. So even if you look at the chart pattern of MMTC, since last week it is giving a lot of comfort both on the delivery based volume as well as on the price breakout as well. Trading above 75 is comfortable to go long. And last but not the least within this space is again Tata Teleservices. So if you look at the entire pack of Tata Teleservices coupled with MTNL, so both these stocks since last 2 to 3 trading sessions are buzzing hand in hand. So TTML above 72 is looking promising. Again, MTNL is also looking promising. Yesterday, the stock has made a strong comeback, unable to sustain the highs, but we are of the view that going forward, again, MTNL will post a strong gain. So TTML, MTNL, MMTC, and IFCI, these are the four stocks which are looking pretty promising from the current level.
Got that. So those are the four stocks that we will continue to look at, as well as we'll chunk that out for all our viewers to see on technicals, the stocks that Mitesh has chosen for all of you at this point in time. Mitesh, you started by talking about defense and railways. Where do you still find confidence here, and where can momentum sustain?
I think momentum will sustain in both the sectors and all the stocks. I think last time we have talked about the fact that the old hero will not come back in the new rally, but this is not the case this time. I think the old hero will come back in the new rally as well, and it is coming up with a big bang. So if you look at the chart pattern of entire Muscat Dock or Garden Rich Shipbuilders, or for example BD or in case BEML or Paras Defense, I mean HAL including, it is thumping table and coming back. Same is the case with railway. So in case of Railtail or IDA or RVNL, if you're looking at even the entire railway pack, barring just IRCTC, somehow that is that stock is not picking up space. Otherwise, majority of the stocks from the railway space is also picking up space. So in case of IRFC is looking good above 142. Again, if you are talking about Rail Vikas, it is looking good above 425. Again, if you are looking about Railtel, it is looking good above 440. So I think the entire railway pack and the defense pack is coming back. Probably going forward, it will be a surprise, Sakshi, to see these stocks again climbing higher and higher, and there is no stopping. So as of now, the stocks are available at a lower risk reward ratio. So
Yeah.
advisable to at least have 8 to 10% weightage in these two sectors.
Okay, got that. 8 to 10% weightage in these sectors is what you're looking at. Let me also read out for all our viewers Jefferies report that came in today for defense and engineering stocks. Jefferies, in a note, has recommended HAL, Siemens, L&T, and KEI Industries as its top 4 picks within the defense and engineering and construction space. Now let's focus on KEI Industries as well as there's one more stock, KEC International. The company has also got 2,200 odd crore rupees in key business segments for oil and gas, business transmission, distribution as well. So that's also in focus. Let me also pull up KEI Industries that Jefferies also recommended at this point in time and see how these construction engineering names are really shaping up. Mitesh, there used to be a time when everybody used to keep talking about the likes of NCC, EPC construction, KEI Industries. All of these kind of stocks would be in focus. Right now, we were speaking to Devin sir also, and he's talking about, again, a lot of manufacturing capabilities, those kind of sectors that he's bullish on from a fundamental point of view. Technically, how are you looking at such stocks?
Yeah, I think you're right. Since last 2 to 3 days, or probably a week or so, the space is buzzing.
Mm-hmm.
Let me give you an example. If you talk about a stock like PSP Project from the same
Yes.
space, after a high of around 677, to be very precise, which has formed on 20th of May 2025, stock has fallen, corrected a bit, but again picking up space. So I think yes, NCC or stocks like PSP projects is picking up space. So L&T is a preferred bet right now, because if you look at the chart pattern of L&T today, in today's session also, it is hitting a higher highs. So L&T is looking pretty promising from the current level, and we are of the view that going forward, stock has the potential to deliver at least 10 to 15% return. So at a stop of 3,500, one can go long for the potential target of 3,900, 4,000. So from the larger basket, L&T is looking good. From the mid cap space, PSP project is looking good.
Got it. So we'll note these two stocks down. Coming to the new age tech stocks, we have discussed this even last time with Ish, but stocks have substantially moved from the last time that we discussed. Zomato, Swiggy, both of them. Yesterday also, I think I saw a 9% move on Swiggy. Zomato has been consistently improving. Today also it's up and it's now nearing 250 odd levels. How are you looking at these food delivery majors at this point after the rally has come into play?
No, I think the rally has resumed. I think you rightly pointed out both the stocks. And if you look at the chart pattern of Swiggy yesterday, it made a high. I think it made a gain of around 8% or so. Apart from that, Sakshi, stocks like Nika is also picking up space. So I think new age companies are now coming into the picture. And surprisingly, from the auto pack, compared to Tata Motor or Maruti, Hyundai's chart pattern is looking pretty interesting somehow.
Okay.
So I think all the newly listed companies and the these platform companies are looking promising. So yes, one can go long into these companies as of now. Probably Swiggy and Zomato will surprise 8 to 10% of the upside from the here on is what we are penciling in.
Okay. Since you were talking about auto stocks also, let me come to you on that. I'll take your view on even M&M adding to the list of stocks that you mentioned in Tata Motors and Hyundai. M&M, why? Because HSBC came out with a report. It has a buy rating there, a target price of 3,470. It believes the margins can potentially improve to mid-single digits over next 12 to 18 months, including the PLI benefits. Profitability can be higher and may also catch up with the ICE, scenario as well, and the ICE vehicles. Now, in the medium term, they believe also taxation is going to be key to look at, and low EV sales are a key downside risk, however. But what would you make of the entire auto space? Even Devin sir did talk about that he's looking again at the auto and auto ancillary names after a whole host of volatile moves. Headwinds have already been into place.
Yeah, so you have pointed out or you have picked up the right stock, Sakshi. So let us draw a chart pattern parallelly about four stocks. First,
Okay.
MN, second, Bajaj Auto, third, Tata Motor, and fourth, Hero MotoCorp. And if you are plotting this same chart on this four companies on the same chart, probably you see a consistent compounder or probably a very strong positioning of M&M. So M&M has gone up but has not significantly corrected, and it is giving a very strong comfort at the current level for accumulation as compared to the other stocks. So I think yes, within these four stocks which I have discussed, Sakshi, probably M&M is the first one who will be hitting a new all-time high sooner than later. So if I compare it with Maruti, Hero MotoCorp, Tata Motor, or per se Bajaj Auto, I think I have a comfort betting big money on M&M as compared to this laggard, because in the meantime, if you look at the entire correction in the auto, M&M has weathered the storm, and now M&M is up for a very significant upside. So probably within this entire auto basket, M&M will be the first stock to hit an all-time high going forward. So we are
M&M will
comfortably.
be the first. Okay. Yes, yes, please go on.
Yeah. So we are comfortably buying the stock at the current level. We have already recommended it to our clients. Probably our client might have direct or indirect position in these stocks.
Got that. So M&M is the top choice, which may actually hit all-time highs first. Citi also came out with a report on autos. I'm going to just highlight two or three key points from their report. Citi mentioned that after a benign cost environment that had boosted the fourth quarter margins, there could be some cost pressures. So that's a concern that they have talked about. Why? Because they believe cost pressures could be emanating from the escalation in the metal costs and the regulatory cost pressures. They also talk about how disruption in the rare earth metal supply chain could impact production in some cases. So that's one a headwind that Citi has talked about. We'll keep an eye out on that aspect as well. Now, apart from the auto space, the one more space that I wanted to discuss again is the capital market story. No stopping BSE. It's continuing to hover higher. I mean, just a few days ago, if you see the bonus split price of 7,000 and odd was seen. The stock went down to around 2,000 post the split that happened. And look at how swiftly it has climbed to 2,800, 2,900 odd levels. So even for those who invested afresh in BSE after the bonus split have actually celebrated very swift gains over the last 1 week, 10 days. Similarly, all the other stocks are also coming back in focus. CDSL, CAMS, Angel One, Motilal Oswal, broking houses, wealth managers, they're all coming back in focus. Is this the time to build on, add some more stocks to the portfolio from capital markets, if not already, Mitesh?
Yeah, so interestingly, Sakshi, what is the best way to guess whether the market is going up or down? And I think if these stocks are giving a higher highs, probably this is the reason to cheer that the market is gonna all-time high sooner than later. So I think you have rightly picked up the space, the entire space, including I would like to also add the AMC companies into this. So HDFC, AMC, UTI, AMC. So I think the entire space is looking good. If you don't have an allocation, you can definitely allocate at this point of time. And CDSL is looking promising, BSC is looking promising, Angel One is looking promising. So yeah, one can go ahead and form a long position in this sector.
Okay, got that. I hope this has also helped all our viewers understand how to go about the capital market story. First 15 minutes, 17 minutes have already passed into the markets. We are still up in trade as far as the Nifty and the Sensex go. Nifty is up by almost 91, 92 odd points at 24,712 now with us. Sensex is up by 300 points, 81,358. We're looking at the key sectors that are in focus right now. Small caps are up, IT index, banks, they're showing us some ticks on the higher side at this point in time. Within the top gainers from the broader markets, you have new gen software that I marked. Welspun India is doing very well, 5.5% higher. Fact is also doing well, 5.7% up. Rights, of course, from the railway pack, which we have already discussed, is up and about as well. Let's, however, look at even the top losers. IGL, Zen-Tech, MMTC, Cochin, although the losses are to the tune of 1 to 1.5%, 2% odd at this point in time. Let me also mark out for all our viewers to see when it comes to the key sectoral action, how the progress is being seen after the first 15-20 minutes have passed in trade. All the sectors, barring just slight weakness on PSU banks, is where we can see actually green across the board. You can see pharma 0.8% higher. You can see healthcare, that's up 0.8% up. Real estate up 0.4%, oil and gas half odd percent, consumer durables some gains also coming in, and minor gains on FMCG, on IT, on metals, on some such other sectors right there. But PSU banks are seeing some profit booking. Let's discuss this space. Mitesh, PSU banks were giving us a sign of coming back over the last 1 week. The kind of moves that we're seeing across the board. Are you getting that confidence to build positions on PSU banks vis-a-vis compared with the large cap private sector banks right now?
Yeah, so Sakshi, now here is a split. So as you know, a few banks have recently added into the FNO space. That is Bank of India, Union Bank. We have a Federal, which is an old one. So as compared to the old banks which are already listed in FNO space like PNB, Can Bank, Bank of Baroda, SBI, I would like to take a fresh bet on the recently listed companies, banks like Union Bank or Bank of India or Indian Bank for that matter, including Federal, because these banks are looking promising. The newly added bank in FNO somehow is attracting more kind of an interest based on the intraday participation or based on the delivery participation. So yes, I would like to go long in Union Bank. I would like to go long in Bank of India, Indian Bank, as compared to Bank of Baroda, Can Bank, or PNB. So these three banks are looking promising.
Okay, these three banks are looking promising at this point in time. Okay, let's actually look at some of the other pockets as well. Let's look at the mid and the small caps. That's where the action was improving since yesterday. So let's pull up some stocks from these baskets as well to see how things are moving up. First, I'll pull up the small cap space, half odd percent higher. That's the one that's outperforming in the broader markets. Newgen we marked, Welspun we marked. You have some railway stocks like RITES, JWL, even Reliance Power that continues to move up, 3% up. Just Networks, Redington, Swan Energy is up, PCBL is up and about. Anant Raj is also moving up in trade. We'll also pull up some stocks within the mid caps now to see how the action is shaping up there. You have Suzlon that's up 2.5%, Vari Energy, NTPC Green, Glenmark, Apollo Tires, Oro Pharma, SJVN. I think this story warrants an attention. Renewable energy, the solar and wind power. Suzlon, of course, we know that has been in continuous momentum. Now NTPC Green, Vari Energy, SJVN, NHPC, NTPC Green, all of them are coming back in flavor again. What is your top choice, if I have to ask you, when it comes to the renewable energy stocks right now, Mitesh?
Undoubtedly, Vari. So, if you are looking at the chart pattern of Vari, since last five trading sessions, both on an hourly chart as well as on the daily chart, it is forming heart of higher bottom formation, and we are of the view that sooner than later stock will enter into a new trading range above 2920. The breakout has been confirmed on 15-minute chart as well, Shakshi. So for intraday with a stop of 2900, one can also go long for the potential target of 3050, 3100, and for the positional target, one can look forward to a levels of 3300, 3400 in next 1 to 3 months. So Vari is looking pretty promising from the current level.
Vari is looking promising from the current levels. In case you need to really still look at some of the stocks from this basket, Vari is the one that Mitesh has his bets on at this point in time. Let me also pull up some of the other stocks that we can track. Let me also spell out for all our viewers some of the 52-week high stocks. Reliance Power, ABB Power, Fortis Healthcare, Lloyds Metals, BSC, Solar Industries, APL Apollo Tubes. That's the space that we are seeing at 52-week high levels. Are there any stocks at 52-week lows? None. At this point in time, which are the top movers? You have even PNC Infra now pulling up 7.3% higher within the broadest index. That's Nifty 500. Minda Corp is another one. GSW Infra is one that's also moving up. So I think the infra-related stories are also coming back, something that we discussed a while back with Mitesh as well. But let's discuss the fertilizers and chemicals basket with you, Mitesh. Fact is up by 7.2%. Is this a story that will carry on till monsoons are done and dusted?
Yeah, this is just the beginning, Sakshi. So if you look at the Chambal or the RCF or NFL or Fact, I think these are the stocks which have recently gained good ground, but I think they are building gains going forward as well. So I am of the view that one should allocate only from the trading perspective. I think Fact, as far as Fact is concerned, our own target is around 1350, 1400 going forward. As far as RCF is also concerned, it is also looking promising. So I think these are the stocks and the sectors which are likely to outperform in the next 1 to 2 months, but only from the trading viewpoint. So one need to be very careful while selection of the stocks, and if you are unable to maintain a very strict discipline of hitting your own stop losses, then please don't get into the stocks, because once the season is over, once the rally is over, probably it is very long period of time for the stocks to again go back to those levels. So these are the sectors and stocks like sugar, or per se, let me put it this way, entire commodity related basket should and must be treated only from the viewpoint of trading, not from the viewpoint of an investment.
Okay, fair point. Let me also speak to you about Wellspun Living at this point in time, which has been on the radar of Jeffries, which gave it a thumbs up and talked about a 42% upside potential as well. Now, this one is with a target price that they are looking at 185 rupees per share for Wellspun Living. They believe it's a leading home textile exporter with the US as its large market, accounting to over 60% of the revenues. The only risk being tariffs at this point in time and the non-clarity on that front at this point. While India faces a lower tariff rate of 10%, but we are still to see what the deal really unfolds at this point. But Jeffries believes Wellspun could be a major beneficiary of India's potential free trade agreements with US and the EU, similar to the one that we have finalized with the UK as well. And therefore, they are very positive on the stock. And that's why the stock has been in focus. Wellspun Group as a whole, do you think a re-rating of sorts is taking place at the entire group level?
Uh, Sakshi, possibly yes, but I think if I look at the long-term chart patterns, we are not that excited about this group, because we have a lot of false breakout in this entire group and the stock. So I think even if you want to get into, you need to have a very strict stop loss discipline going forward. But I think comparatively, I see a good opportunities in auto. I would see good opportunities in, for example, stocks like Astral or large cap stocks like Reliance. So we'll hesitate to put money right now in these stocks, even technically also.
Okay, fair point. Got that. It's 9:42. Let's look at any other key data points and market moves that we can spot at this point. Let's look at the Nifty 100 space to see if there are any other interesting names. DMart is pulling up today, 2.4% higher. We have even Dr. Reddy, Cipla, Zydus Life. I think the pharma space is also in focus today. Within the pharma index, which are the stocks that are actually looking promising to you at this point, Mitesh ji?
So as far as pharma is concerned, I think we stick with the big boys only. So three stocks rather, which are looking pretty promising here. First is a
Mhm.
Sun Pharma, second is a Glenmark Pharma, and third is Lupin. So I think these are the three chart patterns which are looking exciting from hourly and daily chart viewpoint. Apart from that, the risk reward ratio is very attractive, and the volume is also supportive. So we are bullish on these three stocks, actually.
Okay, Sun Pharma, Glen Pharma, and also Lupin is something that Mitesh is watching out for. We'll definitely keep an eye out on that as well. Also wanted to get a sense on the metal space with you. How are you looking at some such stories at this point? Vedanta has come out with its report of focusing on expanding its renewable energy portfolios. Of course, setting its target for 2030 as well for clean energy that they are looking at this point in time. What about such metal stories at this point?
So, metal story, one thing which is pretty sure from the current chart pattern is that metal story will not allow you to participate, because it is going to be a furious ride going forward. So, you see, probably the stocks are opening by 1 or 2%, closing by 8 or 9%, and it will be a complete surprise for you. So, our house view is very clear that let us get into this game slowly and gradually. So, we are
Okay.
buying in pieces right now, and we are of the view that one fine day in the next 10 or 15 days, a big breakout is going to happen in both Tata Steel and Hindalco. So we are a bit on this sector, Sakshi, but I think probably for a layman, it won't be a case where it is visible on the chart, you go and participate. No, that is not going to happen. So it will be a gap up opening going forward, and the gap will get built up throughout the day. And one fine day, you will find these stocks up by 8 or 9%, which is a complete surprise for the street. We have this view on this sector. So we are buying on every decline. We are currently also buying it, and we are of the view that in the next 10 to 15 days, this sector will give complete surprise to the market participant.
It will be a big surprise from this space, metals. So Tata Steel, and which other stock did you mention that you are looking at keenly?
Tata Steel, Hindalco, and Nalco. These are the three stocks which we are looking.
Perfect. Okay. Tata Steel, Hindalco, and Nalco. These are the stocks that you are clearly looking at from the metals basket. First half an hour candle is out, Mitesh ji. Any suggestion that you would have on the markets? Remember, yesterday was the day one after 3 days of a sell-off that we saw in the green. Today, do you think with the expiry playing out and the volatility, we will still have a positive close? Remember, tomorrow is when the RBI policy comes in. So that is likely to provide some more triggers then.
Yeah, so I think I'm comfortable only because if you look at success since last 2 to 3 trading sessions, Reliance, HDFC Bank, and L&T somehow is picking space. So I think something happening, something big will going to happen in the next in the near future where I will see Nifty comfortably crossing about 25,000. So I think with that view, the big boys are coming back on the surface. So with that view, we are extremely positive. Sooner than later, we will see 25,000 followed by 25,200, 500. So probably from here on, around 800 points of a rally one can take into the account for the next 10 to 15 days. That is our view. So with that view, we are going long in the market.
Going long in the market. All right, Midesh ji. Well, thank you then on that note for being with us on the show today and guiding us through all the various moving parts in the markets. Let's start wrapping up the first 45 minutes, half an hour of trade that we have discussed from pre-open till now. Let's look at the kind of move that we are seeing from the Nifty, 24,751. We are at the day's high. 0.5% of a move. It's been a strong start. It's built on further. Nifty Bank now slowly and gradually picking up pace. Now 0.2% higher. 55,807 is what we have on the Nifty Bank as well. Let's look at the mid and the small caps and see how the broader markets are shaping up. It's the small caps that are definitely outperforming between the two of them. Mid caps up by about 0.25% at 58,077. You can also look at how the small caps are pulling up about 0.5% higher, 18,363, 100 points up in trade. So that's the one that is really taking the limelight within the broader markets. When we pull up the Nifty 500 index, it's up by 0.4%. Strong moves being seen across the board as far as the defense and railway names are concerned for day two. You also have fertilizer names that are adding on to the space at this point. You have Fact, that's up by 7% today. Newgen Software from the mid-cap IT space, specified AI names that are up. PNC Infra, JSW Infra from the Infra basket. GRSE continues now with 4% of an uptake again after tremendous move that we saw yesterday. You have Minda Corp from the auto ancillary basket that's up. Eternal, that's up in trade. Rights, Wari Energy is something that even Mitesh ji talked about. Vari as a space from the renewable energy basket is what he really likes. Let's also look at some of the key sectoral move across the board. Sectors, you have autos that are up by 0.3%, FMCG that's flat with a positive bias, IT that's up 0.3%, metals up 0.3%, pharma is the one that's taking some limelight now, 0.8% higher. Private banks, 1/10% up. Real estate, 0.4% up. In trade, consumer durables, 2/10% up. Oil and gas, about 0.5% higher in trade as well. And let's look at the PSU bank. That's the only index which is now lower in trade. But pharma clearly is now seeing some gains come back into fore. Dr. Reddy's, Glenmark, Zydus Life, Laurus Lab, Cipla, Lupin, these are the stocks that you're looking at. And Mitesh ji pointed out on through Sun Pharma, Glenmark Pharma, and Lupin as his top three ideas as well. All right, viewers, we'll leave you at that. Thank you so much for joining us on the morning edition of Market Today. But throughout the course of the day, the conversation on markets with top market experts will continue to help you understand which way is the market really progressing from here and what should be your strategy. In case you're confused about the stocks in your portfolio, you want to add some stocks and you do not know whether you're taking the right decision at the right time, ask away your questions on daily calls. 12 noon is when I will come back with top two market experts taking your questions live on the show.